So once again, good morning or good afternoon to everyone, depending on your time zone. Welcome to a joint Efma Infosys Finacle webinar, Innovation in Retail Banking 2018. Just to quickly introduce myself, so my name is Barbara and I lead Efma webinars, and I will be your today's moderator. Before we start, I would like to firstly introduce our amazing field of speakers that we managed to put together for today. Today you will be hearing very interesting speeches coming from our speakers. Ladies first, so I have a pleasure to welcome Silvia Cunil-Calve, Regional Manager and Innovation Program Manager by Efma. So Silvia, welcome to the session.
Hello.
Also for today, we have with us a publisher of the Digital Banking Report and the co-publisher of the financial brand, wonderful Jim Maris. So Jim, welcome to the session as well. Then we will be also having a dedicated presentation from Infosys Finacle, and this time we have Rajashikara Maya, Vice President and Global Head of Business Consulting and Product Strategy with us. So Maya, also welcome to the session.
Thank you, Barbara, and good morning, good afternoon to all the participants.
And last but not least, and as usually during Efma webinars, we managed to invite one of our loyal banks to speak and to join the panel discussion. And today we have a guy behind the innovation strategy from Banco Santander with us. So Francisco Perez, welcome to the session as well.
Thank you. Hi, everyone.
So before we start, I really need to bother with some housekeeping information, but very quickly from my side, this webinar is recorded. So the video recording together with the presentation slide will be sent to you right after the session. As you may have noticed, your microphones are muted in order to avoid any communication noise. So that's why in case you would like to address any question or you would like to speak and ask something directly to our speakers, you need to click on the hand button that you can see on the GoToWebinar toolbar. So then I will have an instruction saying that I need to unmute yourself and then you will be able to speak. If you prefer to write down your questions, you can send me a private message or you can write it down to the chat. We will have a dedicated space for the Q&A at the end of the session where we'll be covering all the questions from the audience, or at least we'll try to cover a majority of them. So I think that this is everything from my side. If you have any questions, please feel free to reach me out. And Silvia, I think that here it's your turn.
Thank you very much, Barbara. And hello, good morning, good afternoon to everybody. Well, first of all, let me congratulate our collaboration with Jim Maris and Infosys for this whole decade of collaboration and observation of how the banks have been evolving in innovation in retail. It's only when you take a little bit distance and you look behind that you see how much we have advanced. From Efma, we have always tried to be to their side, giving insights, updating the banks and the insurance companies with the newest trends, sharing and connecting. That is the most important reason why Efma was founded by bankers and insurers to help and support bankers and insurance. So this proximity to banks, let us see how in these 10 years we have noticed different rhythms of evolution. First, what we detected was sustaining innovation, trying to do things better, but with small changes. But from some years to now, especially with the eruption of neobanks, challenger banks, and the threat of our friends of Google, Amazon, Facebook, Apple, and Microsoft, innovation is more present in all banks and more disruptive. So fortunately, innovation is increasing in all ways, in all subjects, in all departments, in all areas. But retail banking has been the leading business area in innovation inside the banks. And the others are learning from retail innovation experience. That's what we have observed. Let me share with all of you how we have seen from Efma these 10 years of innovation in this retail banking. First, the innovation was related to products, trying to differentiate, but quickly realizing that everything was easy to copy, and this was not enough. After, the innovation focused in home banking, first in website, after mobile, and now, of course, multi-devices. After, payments innovations, a lot has been done there. Contactless, mobile, wallets, P2P payments, and so on. Some banks in developing countries, you know well, that have used these two last items to skip an advance and had gone directly to there for the unbanked people. And then omnichannelity arrived. This was the next step, going from multi-channel to omnichannel option to integrate all the ways that the customer can access their bank. And for us, the last stages are, in the first position, open banking, that have been recently seen in Lisbon, in Efma's Innovation Summit, and in the Congress too. Banks are preparing to develop platforms to provide services, not only banking services, to differentiate themselves from competitors, to give added value to customers, and to stop the eruption of neo and challenger banks. And second, innovation based in technology as artificial intelligence, big data, chatbots, and so on. So the technology has always been very close to innovation in these 10 years, and nowadays is absolutely necessary. Innovation is based on it. Artificial intelligence, as we said, blockchain, chatbots, all of these new topics are built thanks to new technologies, may be developed for other industries, but adapted to banking. Banks have to face this constant change. There is not another alternative than adapting continuously to new consumers' needs and knowing that their future consumers will deal with them in another ways, different from the ones that they are using now. So anticipating and being aware of new trends is not more an option, is the only way to go ahead. Finally, let me say that this 10 years, so short, so long, banking has completely changed, and Efma is really proud of having been side by side of their members and proud of this evolution of innovation that is an important part of our DNA. So now, Jim, please, we are very curious on what you will explain to us. Please go ahead.
Thank you very much. I'm really happy to be here, and it is exciting to talk a little bit about the report we just generated. For anybody who is not familiar, the report is available for free download. It's 108 pages. It's the biggest we've ever done, and it's available on digitalbankreport.com as well as on the Efma and Infosys Finacle websites. The study itself was a global study of over 300 organizations, and it's the largest sampling we've ever done. It does compare our insights with past reports. And what's exciting about this report, it actually goes over the past 9 years. So it goes over about a decade, back from 2009 on, to talk about what the changes were in the innovation world, what in the banking innovation world. And what we did find, we found a lot of trends. Number one, we found that investment in innovation, even back during the financial crisis, was still a priority for a number of banks. What's exciting is becoming more of a priority over the last 10 years. So it's become a bigger and bigger contributor to organizations as far as being able to do all kinds of innovations for their organizations. What we also found is that the areas of innovation, the geographic areas, continue to be, surprisingly, in what I'll call the less developed financial economies, areas like Turkey and Poland, Eastern European countries, and it continues to be. We saw that in about the third year in the study, starting to come out, and it still takes place today. If you look back on the Innovation Award winners, you'll see that over time they've continued to be focused on not a relatively small number of organizations, but a relatively small number of organizations continue to perform well. And then there's a lot of other organizations that have also done well. So this is, as I said, it's available for free download, so you can get your own copy, and all the slides that I'm going to be discussing today are included in that. If we go to the next slide, we'll see what were the key research questions that we try to answer. So overall, do institutions have a clearly defined innovation strategy? Are organizations committed to innovation? How advanced are they concerning open banking? What's the biggest challenge we have with regard to innovation? What are the most important non-traditional competitive threats? And it's interesting, we've seen those change over the last 10 years quite a bit. And what will the impact of AI and machine learning be in the next 5 years? Now, we obviously don't have time to cover all those, but let me go over on the next slide, some of the findings we saw so you can get an idea of what we found in the report. First of all, we found that despite a need to focus on innovation, a lot of organizations do not have a well-structured innovation strategy. Now, there should be a little bit of an asterisk there, because what we have done is in the last 2 years, we've included a number of smaller organizations. We have a much broader audience that we've looked at. Over the first 8 years of the study, we actually looked at large organizations, and mostly in the European community. Now we've expanded it globally and included organizations of all sizes. We're also seeing that the majority of innovation is being more iterative than disruptive. So we're seeing small steps from traditional financial institutions towards better banking, but not the really big steps that the fintech organizations are taking. Now, there are outliers. There are organizations that are doing very exciting things. But overall, most innovation focus has been on what I'll call the iterative innovations. We're seeing the open banking opportunities are being embraced and are being used as a platform for discussion of new innovative services. And we're starting to see the beginning of this now that the regulations in the UK have taken place and in Europe have taken place. We're starting to see it worldwide that organizations are really embracing open banking. We're seeing that the biggest challenge for innovation is really not systems or budget, and it's culture. And I'd love to get a whole day to talk about that, because I think we're seeing more and more that, again, referring back to the fact that there's a small number of organizations that continue to overperform in the innovation space. And what we're seeing from the BBVAs, from the Santanders, from the organizations, the banks that continue to perform well, we're seeing it's a cultural issue. And what's interesting, obviously, culture does drive innovation in systems and budget. But what we're seeing is that as a foundation element, culture is really, really important. The persistence of risk from fintech, big tech, and challenger banks is increasing. And what we're seeing is this year, it's really becoming apparent that organizations are much more fearful of what we'll call the big tech firms than either the challenger banks or the fintech firms. I think it's because of their size, but what we found in other studies is also because of their utilization of AI and analytics to deliver a better customer experience. And what we've also seen is the use of data and advanced analytics is still far short of what's needed to succeed. And that's a really important point when we look at the fact that the underlying component of virtually anything we're trying to do in the banking industry is going to fall on the data analytics side. So let's get on to the next slide. Let's talk about the presence of clearly defined innovation strategy. What we see on the next slide is, as we've seen in the past, is that the clearly defined innovation strategy still doesn't even happen to 50% of the organizations. Now, it's a little bit short, but we've seen it increase, but this year's increase was actually far lower than we had seen in the past. And what we're seeing is that there seems to be just a lack of being able to cross that 50% line and go quite a bit higher, which is really what we need to do. But when we look at it overall, it's not that these organizations don't innovate, the ones that said no or don't know. It's that there's not a real clearly defined strategy. It kind of happens by mistake, or maybe somebody's put on a project. So let's look at what the priorities of the innovation business priorities actually are on the next slide. What we find is overall innovation priorities are technology enhancements, channels, and customer experience. Those three alone are an extremely important thing to look at, because what they really are looking at what we're doing now is we're starting to look at the power of innovation for the external customer. So in the past, when we reviewed the previous 10 years, we saw that a lot of innovation was done for internal purposes. innovation to cut costs. I mean, it may not have been called that, but really that was the focus. What we're seeing is, while technology enhancement is still a major business priority, channels, customer experience, products are all external focused and really looking at saying, how can we do innovation that's going to impact the customer? And this is what's really starting to take place, is that we're moving from back office to front office, and this is a major transition that we started to see last year. And we're really seeing it now, that the innovation on the customer-facing technologies and customer-facing capabilities really is in response to the Amazons, the Googles, the big tech firms, even the challenger banks and fintechs, where their entire focus is on making the customer experience better. The challenge is, how do we go about doing innovation? So on the next slide, we'll see that we asked organizations, are they most likely to build, to buy, or to partner? And what we saw is, on a 7-point scale, there wasn't an overwhelming leader, but I think what we're seeing is, overall, if you took all these different combinations of answers together, we saw a lot more likelihood that an organization is going to reach outside and either partner or buy, most likely partner with other fintech organizations to help them innovate. This is a very good strategy. It's a very good strategy for one important reason: speed. It is very hard to build an innovation strategy internally and accomplish something that has already been accomplished in the outside world by other organizations. It's a lot easier to build some type of partnership, some type of collaboration that makes it so that we can actually reach out and move forward and get our innovations to market quicker. So when we look at overall, how does technology impact the future on the next slide, what we see is open APIs was the greatest impact of technology. So what we're seeing is that the focus of innovation and technology investments are right now being focused on open API opportunities. And this is interesting because this is a lot higher than last year. And yet we have to remember that as I mentioned earlier, the overall research was done globally. So in a lot of countries, US to be one, and Canada to be North America, all North America, open APIs are still just at the beginning stages, but we're seeing that even though they are not regulated completely right now, organizations are really starting to invest in outside capabilities, bringing them inside. We've seen Citibank develop a platform where they can provide technology benefits to consumers, even if they're not Citibank customers. We're seeing organizations partner. We're seeing organizations move forward. Now, what's interesting, organizations say that the impact of advanced analytics and AI is going to be extremely strong. We see that secondly. What's interesting, when we look at investments, we don't really see that is something that is as big of a focus. In much the same way, the conversational interfaces, we think that the impact's going to be great. We're just not investing in that yet. So as you look at those impacts, and now let's go to the next slide that talks about what is the readiness? How ready are organizations? What we'll see right off the bat is that we just dropped down by at least 1 point on a 7-point scale. So we went from 5+ number out of 7-point scale to a 4+, which means while the financial institution saw that the technology impact was going to be great, the technology readiness is not nearly as ready. So when we look at it, what's interesting is the order of this was almost the same with one glaring exception. Look down the 5th spot, advanced analytics and machine learning. If you remember on the previous slide, what we had was advanced analytics was second most important impact in the future. And yes, the 5th most readiness. And I'd say that's probably an overestimate as far as how ready they are. So when we look at what we have to learn from this innovation study is that we are pretty aware of what the impacts will be. We're not nearly as aware and focused on what those impacts on those technologies have to be. And so we really are falling short on open APIs, conversational interfaces, and analytics. And I will say that when you look at the importance of technologies from other studies we've done, advanced analytics should be at number 1, because you can't do open APIs as effectively if you don't have your advanced analytics and AI in place. We also would say that conversational interfaces, while extraordinarily exciting and where there are going to be impacts, for the majority of organizations, this is not a priority right now as much as making sure that we get our data game in order. So looking back into other areas, we also said, what are the delivery channels going to be in the future? Well, there's no surprise here. On the next slide, what we'll see is that overall it's mobile channels. Mobile channels are an extraordinarily strong element of the future. So we look at mobile and online. Now, what is interesting about this slide is that mobile actually jumped up. So look at that, 6.56 on the 7-point scale. I don't think anybody can disagree with that. What is interesting is if you can go back to the other reports, and by the way, Infosys Finacle has been really kind in that they're going to be providing access to all of the previous 9 reports. And it's a great study because it does show that mobile was not nearly that important back 10 years ago. Online was certainly important. Branches were important. Look where branches fall globally is important. 3.84 on a 7-point scale. So we're seeing that branches are falling down, relationship managers are falling down, call centers are falling down. But yet mobile and online are becoming key as our digital assistants. So when we look at the channels of the future, it really is good to look at the channels of the past and to see the flow. So as we look then, the next question we asked was, and the final question we're going to go over today, what are the competitive threats? And I already gave you an idea what the competitive threats were. And competitive threats overall, what we saw is the leading competitive threats were digital commerce platforms such as Amazon and Alibaba, leading consumer technology companies such as Apple and Google, and then fintech startups and challenger banks. And then it falls from there. Interestingly, if you go back 10 years, it's almost flipped in that the players from other industries, telcos are thought to be a really strong competitive threat in the future, incumbent banks, challenger banks. And there was no such thing as fintechs 10 years ago. At least we didn't call them that. And there's no mention of the big tech players. What that really shows, as you look at the flow again, is how greatly these are changing and where we have to focus. And I think that the takeaway from this is, if you look at the first 2 and even the first 3 elements on this competitive threats, all of those organizations, their threat really comes from their understanding of the customer. So when you're looking at the bank of the future is really going to be one that can take data and can use it the most effectively to innovate, cultivate, and impact the lives of the consumer, not just in financial services, but beyond financial services to include such things as commerce, travel, hospitality. I was out yesterday and I saw, it was interesting, a little sign on a McDonald's drive-through window in the US, and it had a little sticker that said Uber Eats and McDonald's delivers, and it was a sticker that was all together. And it was interesting because immediately I thought of the fact that look how Uber has expanded their portfolio of what they do beyond being a very clean taxi to being a delivery service. They deliver packages, they deliver food. They make recommendations for restaurants. If you're in one of their cars, you can get an Uber Eats recommendation as to where you should go to a restaurant, not just delivery. So I think what we look at when we're looking at the bank of the future, we're looking at organizations that can take data and apply it in an open banking platform to make a consumer's life easier. I'm not going to turn it over to Maya, who's going to talk about what is the bank of the future. And I'll be back later with a panel discussion with Francisco from Santander.
Thank you very much, Jim, for an awesome presentation. So let me take you through in terms of what Infosys Finacle feels the bank of the future will look like. When I move to the next slide, basically what we are looking at is in terms of the entire situation of what is changing the global industry, including the financial industry. The banking industry, as Jim mentioned, is undergoing a systematic shift when it comes to in terms of the changing dynamics. and it's largely driven by the legacy environment that they're struggling with, and as well as the experiences expectation delivered by the Uber, the Airbnb, the Alibabas of companies is also expected to be given by the banking organizations. At the same time, the changing dynamic customer expectations and the profiles is also giving a lot more impetus for banks to look at in terms of the way the industry shift is happening in their own environment. Apart from that, we have seen over the last 10 years, along with the Efma research, whenever we ask a question about what is the major threat to the banking industry going forward, most of them have mentioned about non-banking entity, whether it's a telco or a retail or it is fintech or a big tech, but never mentioned as banking industry. So this major competitive threat coming from the non-traditional banks is also going to change the way the banking is looked at. And of course, always there has been a pressure on the margins and as well as profitability, while these two things are from the bottom line perspective. If you now look at in terms of the return on equity and the cost of equity, most of the European banks and even to some extent the US banks forget about the return on equity. They are not even able to meet the cost of equity expectations. The only banks in Asia and the Latin America and the African region, they're able to now talk about some decent return on equity because they are able to now cater to the customer expectations using the latest technology. Moving on to the next slide in terms of talking about how exactly the banking paradigm is changing. We are witnessing that it is a comprehensive change in the way the banking is being delivered. Just like what is happening into other industries like a retail industry or a high-tech industry or an entertainment industry where everything is going to be on demand, like how the Netflix has changed the entertainment industry, we foresee that the banking is also going to be based on the demand banking in terms of what the customer wants. In that direction, one of the key elements which we are witnessing in last 3 to 4 years is the digital. The digitalization is reshaping the entire banking industry, and I think it is, of course, applicable to other industries as well. But it is more important when it comes to in terms of banking because the customer expectations around digital is changing rapidly. The reason behind that is digital is not just one technology; it is a comprehensive set of technology coming together. It is not just disruptive. It is always been a pervasive, and more importantly, it is going to provide a transformative capabilities for the bank. Frankly speaking, it is very, very important from a perspective of how constantly the challenges, these things are challenging the status quo of the bank, and as well as it has an application of a ubiquitous impact and requires constant imagination of the business model, and the opportunities and the threats. And with this pervasive digitization, one of the key things that our industry is facing is the dual disruptive threats. One is in terms of disintermediation, the other one is in terms of commoditization. And that is what we are talking about in the next slide, where it is basically it's a cycle of disruption, where you have on the one side a disintermediation is happening when it comes to in terms of the financial services being delivered. It doesn't matter who delivers because, as Bill Gates mentioned rightly way back in 1990s, going forward, banking is necessary, not the banks. So it is not important the banks only deliver the banking services, but there are other players who can also deliver the banking services, and that's how the entire banking landscape is getting disintermediated. The second thing is the banking services are getting more and more commoditized. To begin with, the payments industry, that is the most commoditized service line in the banking industry. And at the same time, if you now look at in terms of the each and every element that is associated with that cycle of disruption, whether it is a new digital disruptor coming into picture, it is a combination of the technology changes which has not happened in the last 100 years. Such kind of technology changes have happened in the last 10 years. And at the same time, the emergence of technology like blockchain or a mobility or a cloud computing, or in terms of the virtual reality, the augmented reality, or even the mixed reality kind of situations. And as Jim mentioned, the whole aspect of open APIs, and coupled with that, the Internet of Things is comprehensively changing the banking landscape. And at the same time, what we are witnessing in the last 2 to 3 years is the increasingly the power is moving to the endpoints. That means Wherever there is a last mile connectivity that ends with the customer, they are becoming more and more powerful, and they are becoming more and more enabled and empowered, and they want to be taking control of their situation. So that empowered customers is also moving into the situation where banks are no more expected to be in a status quo, and they cannot say that they have delivered everything and they get into a comfort zone. Every day they have been challenged. But at the same time, since the financial crisis is coincidentally since we started this journey with Efma, we have seen that there are a lot of regulatory initiatives and changes that is pushing banking to become a lot more open, a lot more closer, and a lot more standardized when it comes to in terms of offering financial services. And they are bringing in more and more a level playing field for every player, including banking. And we have seen this globally and as well as in India, where there are players like telcos who have been given licenses to operate as a payment banks, which are basically has been a predominant play for the banks. Not just that, within the industry itself, we are seeing a lot more competition coming into picture. Each bank is trying to know, in one part trying to compete, in another part trying to collaborate. When it comes to technologies like blockchain, they are collaborating. When it comes to technologies like mobility, they are trying to compete. So this is the cycle that we are seeing in terms of disruption. Having talked about that, if I now move to the next slide, what are all of these technology, the cycle of disruption is giving banks is in terms of a comprehensively changed operating model. And this is where we are seeing the banking business is moving from a traditional pipeline business to the platform business. Why platform business? If you now look at in the last 8 years, the composition of the S&P, the Standard & Poor market value, if you now look at, the top 8 most valued companies in the S&P is the platform companies. But at the same time, if you now look at the 60% of the global unicorn companies, the unicorns are the $1 billion plus valuation companies. They're all platform companies. When it comes to Asia, if you now look at in terms of almost out of 31 out of 36 unicorn companies, there are platform companies. And where I come from, India, almost 8 out of 9 unicorn companies are platform companies in Indian context. So this is a no-brainer that the market, the investors, the customers, the participants, they're all valuing the business models that are more and more moving towards a platform business. And this is where you get that moving away from a linear value chain into an emergence of a network business. And technologies like blockchain will help the banks in that direction. Having talked about that, if we now look at in terms of moving to the next slide, what exactly does that mean to a banking technology or a banking player? We are seeing that banks also are being driven towards this platform business. One, from a basic survival perspective. Second, from a basic relevancy perspective. And the third one is from a basic contextuality perspective. So if banks are not able to adapt to this changed model of a platform business model, I think they are going to become history very soon. Basically, what does it mean? So most of the time, we have seen the traditional banks will have their own set of products being offered and manufactured and distributed. Probably in some cases, they would have taken a step ahead and offered a complementary product. And in some cases, they've gone out and they have offered some joint or a white label products. But that doesn't make them a comprehensively a platform company. What is exactly needed going forward is in the right hand bottom side are the 3 elements. They have to now look at how to combine the non-financial products when they offer a total solution to the customers, and how to make sure that you bundle a competing products. And this is where the technologies like blockchain will help you in terms of collaborating. And more importantly, in terms of how do you aggregate the customer data and provide a real-time online view to the customers when it comes to an aggregated data. And on top of it, a successful platform company is always having a comprehensive marketplace available, where not just its own products, even the other company products and people who are able to now come and develop, and it is basically going to an extent of externalizing the innovation. And that is exactly where the financial services marketplace, the middle layer, is expected to become a platform company. And this is where the shift will happen to a financial partner, and you will be able to provide the customer insights to the parties you are going to come into picture. And it will also help in terms of making more and more personalization and customization, and making sure that you have a relevant and contextual offering. Above that, if you now look at, there are two boxes. The first box on the left-hand side is largely, this is what a traditional bank would be doing, their own channels in terms of having an online, mobile, or a social, or a kiosk, or an artificial intelligence-driven assistant, or a wearable. But what is more importantly required when it comes to in terms of in the open API context, this is where the banks have to move towards an API-led distribution. Which brings in the third-party products, brings in the fintech, the startup, the developer community, and more importantly, the other financial institutions also should be able to come and participate. And this is the overall landscape when it comes to what it means to be in a platform business for banking that we are propagating, and we are talking to the banks. Moving to the next slide. Are there any real interesting case studies that we have seen in the marketplace? Yes, obviously. We have seen an instance of a bank in India called Ratnakar Bank Limited. It's also called as RBL Bank. This is a bank which has been in existence for more than 60 years now, but only in the last 10 years, because of the management change that took place and the professional bankers came into picture, they realized that the traditional way of running this bank is not going to be relevant in the change context. What they did is they realized very early stage that they have to be a lot more open and adapt to the open API kind of a situation. Today, they went ahead and offered a comprehensive RBL API store where they invite all the developers, the startup, the fintechs, and the app community to come and use their APIs to develop relevant apps. And they have constructed a commercial model around it, and they are monetizing it, and they're able to share the revenues with the developer community. And because of which, this bank is now one of the fastest growing bank. And of course, they had challenges of attracting the very high talent when it comes to the information technology talents to their IT department, because the preferences in India is to go to the top-notch IT companies or next to the top banks. So with this approach, they are not only effectively able to compete with the leading banks by externalizing the innovation and also having access to more than 10,000 developers. And this is one of the leading bank in the world today when it comes to offering APIs. They offer more than 50 APIs in their environment. And just to give you a perspective, because of this approach, today almost 50% of their loan book is being sourced by this kind of the fintechs itself. And that's what has been covered in the next slide. If we can move to the next slide. So that is the importance of how do we now not only leverage the technologies like Open API, but at the same time drive your business through ecosystem. And as well as their balance sheet has grown by almost 25 times in last 7 years. And around last year, they went ahead and had their initial public offering into the share market. It got oversubscribed by more than 70 times. This is the kind of premium you get when it comes to you playing the platform business role. Having talked about that, let me now move to the next slide where I'm going to give you an experience of how personalized customer experiences are going to be relevant in the change context, because this is exactly what the leading market value companies are doing, whether it's an Uber or an Airbnb or an Alibaba kind of company. We have an example where a DBS Bank, which has started its operations in India way back around 15 years, but because of the licensing arrangement with the central bank here, they had only access to 5 branches. Imagine 5 branches and serving 1.2 billion potential customers. So they had to think differently. They had to offer something very, very unique. So they leveraged the technology. They went ahead and adapted the mobility as the prime criteria. And they also did some survey and found out that almost more than 65% of the Indian population is less than 30 years of age. And they are one way or the other connected over the internet and network. So they shortlisted that as their predominant customer base. And they also went ahead and white labeled and partnered with a retailer here called as Cafe Coffee Day, which is equivalent of a Starbucks in the US. And these customers are frequenting that outlet, and they just put a banner there and ask these people to just scan and QR code put up in that banner. Within 90 seconds, the customer is onboarded, the account is created, a virtual wallet is being created, and as well as a virtual debit card being given, and we can also pay the bills to that retailer outlet at 20% discount. When it was launched in 2016, within 18 months, they're able to onboard more than 1.8 million customers. And for the last 2 years, in 2017 and 2018, the DigiBank by DBS has been rated as the best digital bank globally. And as well as in 2018 April, they got the award from Celent, the analyst firm, as the best digital model bank award. So what they've done, they've really gone ahead and implemented what typically the big tech companies are trying to do: bring in the ecosystem, participate ecosystem, curate the ecosystem, and make sure that you bring in the collaboration. And they've also gone ahead and tied up with 2 fintech companies. One fintech company called Monitor, which helps the customers analyze their statements. The another fintech company called Casisto, which helps answer the customer queries. Imagine almost 80% of the customer queries are answered by these artificial intelligence enabled chatbot by Casisto. So this is how they are able to now leverage the technology to a large extent. And this is comprehensively, moving to the next slide, this is comprehensively paperless, cashless, and frictionless experience. Not just that, leveraging the Indian banking and open banking initiative called UPI, which is the Unified Payment Interface, they're able to now link all other bank accounts of a customer inside the DBS app, so that I don't have to go ahead and download other bank app at all. So within the DBS bank app, I have all other bank accounts linked, and I should be able to transact on those bank accounts as well. And this is the real stickiness that they have created while offering these kind of capabilities. Moving on to the next slide, where I want to talk about in terms of how we are seeing the future of bank when it comes to in terms of the core processes versus in terms of the new technologies. And this is where the Finacle digital engagement suite will help the banks, in our opinion, to ride this way of digital, and as well as bring in all the elements comprehensively in one place. One is in terms of having the comprehensive multi-channel framework, which unifies all the digital channels of the bank, and moving that to an omni-channel experience where you have the context and the channel hopping capabilities being provided to the customers, and which provides a unified omni-channel journey for the customer, and moving into a comprehensive digital engagement hub where you have, in addition to the bank's channels, you bring in the partners, the fintechs, the APIs, and as well as the artificial intelligence and embedded analytics, all of them coming together to help the banks to leverage and ride the wave of digital in a much more seamless and much more comprehensive way, and go ahead in terms of occupying the mind share that typically a big tech or a fintech is trying to occupy. So I'll stop here. I'll hand it over to Jim for his session on the panel discussion along with Francisco.
Thank you very much, Maya. You know, it's interesting. You brought up the DBS Bank, and it gets back to some of the things that I was discussing earlier around the fact that we're really in a situation where culture makes the biggest difference. I remember meeting Sonia from DBS and DigiBank a year ago at the Innovation Conference, and it was interesting because one of the major things that she talked about was the fact that, you know, it only took 9 months to build that bank, and people were astounded by that, and they said, well, where did you come up with that, or how did you pull that off? She goes, well, you know, the birth of a child only takes 9 months. We thought we should birth a bank in that quick of a time. And it was an interesting comment, but it also showed the commitment internally at DBS towards the innovation process and toward building that better bank. So it's very interesting what can happen when you focus your time and efforts toward that. So I'm not going to talk to Francisco from Santander, and you know, Francisco, you know, when we talk about innovation, we talk about culture. You're the director of innovation strategy at Banco Santander. As you look back over the last 10 years, what do you think was the most impactful innovation over the last 10 years?
Hi, everybody. Thank you, everybody. Well, in terms of Santander, as a corporate and here in Spain, we're always having this discussion about what was that innovation that had a major impact in banking in the last decade. And we all arrived to the single answer that everyone knows, that is evolution from web banking to mobile banking, because it was not a technological evolution. It was a change of mindset. It was not exporting what the bank had to the web channels, but also thinking about the customer experience and simplifying processes and products in order for the customer to have a real engagement experience. And from that point, we also understood that developing the ecosystem of apps as an option to the customer, even to the non-customer that soon became customers through digital onboarding, it was a key point of the strategy. In Santander, for example, we diverged from the market. We decided to have a one-stop shopping model instead of a fragmented ecosystem of applications or services. With the evolution of time, I think this might change for certain services and for even the non-customer segment that we're approaching.
You know, it's interesting too, Francisco, is that Santander is a great example of an organization that, you know, at the beginning when we looked at mobile in the banking sense as a way to cut costs. I mean, it was obviously that the business case was around moving transactions from the branch network to the mobile network. But Santander is one of the leaders in being able to determine that it's got to be more than that, that you really have to build the digital process from the back office forward. It's not really, you know, we use the comment putting lipstick on a pig. You really, initially we took online and put on a smaller device. But Santander and leading banks across the world have really realized that you really have to build digital transformation from within and change entire processes in order to make them simpler on the mobile. Isn't that true?
Yeah, that's right. As a matter of fact, I remember by 2011, Santander UK, they were our benchmark for understanding that transactionality was not the only key thing to engage with the customer, because that was the typical vision of banking. We needed to open our sales channels even beyond our own mobile application to other mobile applications, even the web open market. As a matter of fact, Santander UK was the lead in the group for that. Also, Argentina understood that the engagement part beyond typical transactional thing for the bank was rewards. And they began to develop rewards on mobile, even with geofencing and geomarketing. By that time, it was top notch for the industry. And here in Spain, we understood that we needed to go a step beyond and open to the sales arena, and also to transform our relationship model into what we know here, a digital model that is based on remote bankers assisting our premium customers, for example.
And you know, I'm going to remind everybody, if you have a question, please put online. We have about 10 minutes left in this conference, and I think it would be great if we had outside questions as well. But you know, as we look at the way we built the report, Francisco, and also Maya and Sylvia, we really focused on the fact that culture is really the differentiator. And I know that Santander has really gone through a major transformation over the last 3 to 4 years, organizationally and structurally, to really focus on the ability to innovate and to create new products and services. And Francisco, I'm going to ask you first. I'm going to ask the people from Efma and Infosys also around, how do you create a culture of innovation or a culture of looking outside the organization for ways to serve the customer better?
Yeah, well, that's a golden question, and it's hard to answer. In Santander, I remember that there were no innovation area for 4 years ago, as such, in the corporate at headquarters, for example. And at the local level, it was asymmetric. I mean, there were many banks that had something called digital transformation and some areas of laboratory or experimentation, but there were no innovation area as such, neither an innovation culture in the DNA of the group, beyond that of exploring new things. So we had to engage in the transformational process together, all the local banks and the corporates. And 2015, we initiated what we call the innovation corporate area. And we achieved one milestone, that was a big one, that was aligning all that structure together with the local countries. And from that way on, we created the systems in order to centralize, or at least to orchestrate the flow of innovation within the countries. In that regard, we began to understand that synergies took place as simple as just coordinating the initiatives in the portfolio with a more disruptive thinking that of traditional bank improvement initiatives. In the recent time, we're also establishing, a year or 2 years ago, a strong force or work stream for orchestrating ecosystems of innovations. And we worked at a global level with the corporates. And what we do is to have an open innovation work stream with ecosystem for venture builders, accelerators, incubators, in order to exploit what we have inside with talent from outside, from fintechs, or even technology companies that don't belong to the financial system. And in a way, we think we're our journey to the innovation, change, or transformation. There are a lot of also of key variables that we're also trying to manage, because it's typical of trade-off of trying to survive the business as usual with the regulatory implication for PSD2, for example, here in Europe, or whatever other regulation that is time consuming and capital consuming. But we understand that with most established new models of innovation monetization, for example, how we capitalize investment or tax reduction in order to improve the investment in innovation, how we open funding of innovation, for example, to our segments of private or stuff, or thinking about it. But it's hard because the regulatory system here in Spain or in Europe is very tight regarding this thing. And one thing we understood that was an obstacle regarding our typical traditional banking model, it was the provisioning or sourcing of human capital, IT services, and partnership of suppliers. It was not agile. And we had so many rules that we cannot be flexible when assembling a new business model that is open, because we wanted to build open ecosystems with fintechs, for example. So we're working on that. And we're trying to do that in a case-by-case model.
It's interesting, Francisco, is that, this whole cultural thing, it's really a difference between talking it, because we're all talking for our investor public, and doing it. And following your organization for a number of years, you are one of the organizations that do it, BBVA and some other ones as well. And I think the difference is that you consistently see really the actions and deeds following, the message. And that's strong, because it's easy to say you're going to be innovative, but your employees quickly realize that it's a false promise if we don't back that up. From your perspective at Infosys Finacle, I'm sure when you're going in and you're trying to consult with organizations, culture really becomes very clear early if an organization is just trying to check off something in the checkbox as opposed to implementing some innovation ideas. What do you see as the one thing that is most important as you look at organizations that gives you a good definition on whether or not an organization is really going to move forward as opposed to just checking something off their task list?
Thanks, Jim. So what we are seeing is, yeah, please go ahead, Francisco.
Go ahead.
Okay, thanks, Jim. What we are seeing as one of the most important criteria when we interact with global banks, as you're aware, we work with more than 200 banks across 100 countries. We see traditionally there is a innovation hub being created, and there is a chief innovation officer who's responsible for that as a unit. But we have not seen very successful innovation coming out of those pockets of excellences. The innovation has to move from a pocket of excellence to a center of excellence, and it has to be across the organization. And we have seen organizations where it is starting from the last mile connectivity, the person who's interacting with the customer and the branch, going up to the top management. Everybody has to be innovative. And this is exactly where I wanted to give the case study of a DBS. And in last 3 years, they have started this journey of calling all their employees as entrepreneurs. And everybody should think that they are running their own business, and they have been invited to give ideas, and those ideas have been validated, and those ideas will be given due preferences. It will be validated, and then it will be taken to the action. So whenever we have seen innovation is a pan organization phenomena, There we see a lot more agile and responsive organization and more customers trying to buy into that idea than it being a pocket of excellence under one group or one division. I'll stop here.
And Sylvia, okay, go ahead. I'm sorry.
Yeah, that's right. I mean, I think that you're quite right. We understood that inside innovation was critical, fostering the culture. As a matter of fact, by that time, 2011, we had a portal of providing ideas and challenges as it's done today with external providers. And the thing is that when you learn this journey of innovation, at the end, I don't know, it's kind of sad this, but it's the real thing. It's not about having so many ideas. That is true. That is gold. But also how to deploy those ideas into practical products that will see the light at the end of the funnel. And in that regards, to my experience, it's been the hardest part of building the culture and the processes of innovation in a corporate company like this.
Yeah, I was going to pass over to the moderator. Go ahead.
Yes, I would like to say that it's true. I agree with all have been said, but in terms of culture, what I think it's very, very, very important is that the CEO and the high management are convinced and having time for innovation, and let a little bit the day-to-day apart. And first, they are the first ones to be involved in innovation, because sometimes you have the management saying their employees very concerned and very implicated, but then the middle management you have there sometimes saying yes, but don't acting. So I think that the highest management in the company has to be involved, informed, and dedicating time to innovation.
Right, and that's a key element in that we find that a lot of times organizations that do not have bankers at the head of the bank do the best because they're taking it from a technology or a engineering perspective as opposed to a banking perspective. It appears we have some questions that are right now available. Do we want to ask a question from the listeners for Francisco?
Yes, so we have a couple of questions, guys, and I'm receiving more and more. So let's try to focus on the most interesting one. I have one question from Dmitry coming from Alpha Bank Russia. He's asking about your opinion on what is the future business model of the banks based on your opinion. So what do you think is more perspective? To create an ecosystem like Alibaba, or to create a platform with open API solutions and integrate it in the current huge traffic generators and huge players on the market? So Jim, do you want to start, or Francisco, if you have any?
I'll just start from what we've seen organizationally, globally, is there's not one structure. And that sounds like a cop-out, but the reality is, both on a geographic and competitive standpoint, as well as how an organization is structured digitally today, really will help define what their model is going forward. I mean, organizations, there's going to be room for every type of organization as long as they implement it well. So if you want to be a mono product organization, you could take that route if you're going to execute it with perfection. If you want to be like an Alibaba and have a platform that takes into e-commerce, there aren't going to be many spots available, but for the large organizations, it's obviously going to be pretty easy. And when you look at it from the standpoint of digital technology, digital technology makes it so that any of these models can be effective. But the reality is, what you're going to have to look at is, you're going to have to, I think the way it's really going to end up is the majority of the organizations that survive are going to be those that build an ecosystem that includes both financial and non-financial products that are focused on the data that we have and actually make a consumer's life easier. And that may be, there are going to be certain organizations that will be able to be structured to serve the underserved customer effectively and fiscally responsibly, where in the past it was not available. But the ability to change your credit bureau, adjudication. So change the way you deliver services, and the service you deliver will help. What have you seen, Francisco? And we're going to have to get off the phone then, but what do you think?
Yeah, I'm totally aligned with you, and I think the answer is not simple, and it's not one regarding business models. For example, let's remember that the banking industry is quite complex. We have different segments and different business lines. What we see today sometimes it's a mistake when we talk about innovation and comparing to fintechs that are mono products, for example, or they have a simplified business line. Is that we as a traditional bank hold, for example, universal banking, multiple segments. We have wealth and private banking. We have wholesale banking, investment banking. So it's many business lines that they diverge in the future. For example, I see a typical traditional banking modernize or transform into digital, but it's standalone, for example. The next evolution of that. Another archetype is a closed platform that is just a number of players, I mean, tier 1, tier 2 players together with fintechs that design a platform business model in order to change the ecosystem. And the other one is an open platform model that will have whatever players they want to participate, and that the economy of scale will provide the monetization of that platform for all the players. For example, in retail banking, I see two types of model depending on which line and which products. But what we see here is open marketplace, for example, in the future, that all commoditized products no longer will have interest, but it's just a simple product to have. And on top, we are devising new value-added services together with fintechs, or even the traditional bank evolves into a fintech itself. So there's no single answer to this. We'll see this evolution in the next year, but what is for sure is platform-based models, whether it is more standalone or open, but platform is a rule for the future for sure.
That's great. And I appreciate everybody who's been on the line today. Again, I remind everybody that the Digital Banking Report, sponsored by Efma and Infosys Finacle on the Innovation of Banking 2018, the 10th anniversary edition, is available at 3 different locations. And you can just simply do a Google search on Innovation in Retail Banking 2018, or you can go to the digitalbankingreport.com. I want to thank Francisco Perez from Banco Santander, Maya from Infosys Finacle, Sylvia Calvet from Efma, as well as the organizers. Barbara, is there anything else? We're running over time right now.
Jim, thank you very much. I'm afraid that we're really running out of time. And in the meantime, I received a lot of questions from the audience. So really sorry that we didn't have time to respond to all of them. But let's try to follow up afterwards. So we'll be sending you an email with the recording, with the presentation. And we'll be also trying to address all the remaining questions to our speakers. So hope it's fine by you. And we really look forward to seeing you, let's say next year, once we will be tracking the innovation trends from 2019. Thank you so much and have a wonderful day.
Thank you. Thank you very much.
Thank you.